All right, guys. Today I'm going to go over risk management. This is the Bitcoin chart. First thing first, this is going to be your basically best friend with risk management. So I'm going to go over this first. So basically, this is the last wave up on Bitcoin. 1, 2, 3, 4, and this kind of drawn out wave 5. But I was first of all, we were kind of expecting something like this, but it was more drawn out, because the timing's not always perfect. Sometimes wave 5s get drawn out for whatever reason, but you just kind of roll with it. Didn't change our outlook, didn't change my bias at all. I was still planning on taking profit right here. And I was really planning on going short there, but I didn't. I wish I would have, because it dumped like 20% last night. Hopefully some of the students did. So Bitcoin's coming up to a really important resistance at like the 62,500 mark. It's just creeping up there. Probably will get there, but just make sure you pay attention to that zone. See if you can see. I was planning on it going straight up, pretty much, or at the same speed that the last waves up were going, but ended up still rejecting that zone. I've been looking at that zone for a while, and it looks like it's going to go ahead and be a pretty massive wave 4 down, which will be pretty great opportunity for us guys. Anyways, so now you know what you're looking at, kind of. Basically, you want to risk about 2%. That's kind of the standard that I use. You can risk 3% per trade and not get out of control. It's whenever you start risking 8 or 10%, or just don't even pay attention to exactly how much you're risking. If you just eyeball it, that's bad news. You'll eventually blow your account, and it's mostly because of losing streaks. You're not going to get around a losing streak. I think out of 50 trades, if your win ratio is like 70%, you're almost guaranteed to have a losing streak of like 3 or 4. So it's those losing streaks that that's why you have to have a risk management system, is for the losing streaks, basically. So, but even risking 2% doesn't seem like much, but I promise you, leveraging and trading Bitcoin or alts, you can still do really well in a short period of time. And you want to be that disciplined. You want to compound your account slowly, or you won't compound it at all. Taking big risks is just gambling, no matter what system you have. Even with my system, if you're risking 10 or 20% of trade, you'd blow it up, guarantee you. So this little tool, we're on TradingView, obviously. This is the long position, short position, and obviously right here, this is a long position. I'm pretty sure I took this trade. This is, so you just double click it and enter your account size. I just did 10,000 here, just for a round number. And then your risk for 2% would be 200. And all that means is, if your stop loss, your red is your stop loss right here. So if you get below this, you're stopped out, correct? And then if you get to the top of here, your take profit hits. I know it's elementary stuff, but and then essentially this will tell you how much to risk based on that. So every time you get stopped out at the bottom of this, it's going to cost you $200, no matter what, no matter where it's at, because when you move this, your quantity changes. And I literally use this on every trade. tells me exactly what my quantity should be. So here, if you're going to put your stop loss just under the 786 retracement, which is like the standard for Bitcoin for my trading system, here if you're risking $200, your quantity would be 0.14 Bitcoins. That's how much you would enter in the trade to risk the proper amount for that account size balance at 2%. Now, so a lot of the times on higher time frames, these 7-8, so first of all, wave 2s they're always golden pocket entries, and the standard would just be to put your stop loss under the 786. But on some of the higher time frames, that makes for a pretty big stop loss. So like for instance, here from the bottom of the golden pocket to here would be 7%, and I would never have a stop loss at 7% on Bitcoin. It's just way too precise. There's just no point. With altcoins, that's a different story. They're more volatile. I almost always just put it at the bottom of the 786 whenever I'm entering off the golden pocket. Now, so back to this, I can't remember if I had my stop at the 786 or if I did my usual 1.5%. If I don't use the 786 on Bitcoin, if I enter off the golden pocket and not stopping at the 786, my stop loss is either 1.5% to 2%. And that's kind of like the range that I like my stop losses on Bitcoin anyways. Again, with alts, it's just the 786 for those entries, no matter what. I don't care if it's 5%. With Bitcoin, it's just so easy to trade lately that I won't usually have a stop loss over 1.5%. So we'll just say for now, let's run this at the 786. You entered at the golden pocket, it bounced pretty much perfectly off of that. And then for your take profit, your wave 3 take profits are the 1.618. You'll learn all that stuff in the course. But that will tell you where to take profit also. So for this setup, you would have made $2,314 if you risked $200. So as you can see, even with 2% risk, you're gonna be able to start compounding your account really fast. So 20% of your account in why does that not have the amount of days? March 4th to March 13th. 9 days. You made $2,400 in 9 days, only risking $200. So it's way no. Let's see. And not only that, this was a perfect take profit. I'll run it again just to show you. Or I already have it. See the swing low, your first plot is right here, second plot right here, third plot right here, and that gives you your target for the next wave. And it was just, doesn't get any tighter than that. And then I'll just say that you ran 1.5%, it'll change your entry from, that's close enough, 1.48. It was 0.14 Bitcoins on the first trade, and let's say this one with a 1.5% stop loss, you would up your quantity to 0.29 Bitcoins for that trade. And instead of making $2,300, you'd make $4,500. Now, it says 14,000. That's because your initial account size is 10,000, and that's saying what your new account size balance will be after you take profit, which your net profit would be 4,500. And here, same thing here. So this is assuming that you have a $10,000 account balance. This is 9,800 if you lose. So let's look here. This is actually another trade that I took. I guess the last long that I took. And I got in on this one on a lower time frame, it looks like. Yeah, I did. And then just kind of let it ride. So I'd have to zoom into a lower time frame to show you this. I like to use the magnet. That's because it's so precise on all these. Oh, you know what? I traded this on Binance. On Binance, it hit this golden pocket perfect, or I wouldn't have got filled. If this, because this is a BitMEX chart, technically I wouldn't have got filled on the exact same trade if I was trading on BitMEX. But Binance, it did come down for this golden pocket. So anyways, here's my entry. I know my stop loss on this one was at the 786. And then this was kind of a scalp trade that turned into a long because I missed this initial area, if I remember correctly. And took profit at this major resistance right here. That's not right. What the fuck? That's not right. Is there two of them right there? No. Am I crazy? Oh, okay. I guess I already changed this. Oh, okay. I knew I hadn't changed this. So this is risking $1,000. So for that, you'd want to have at least 30,000 in your account, right? Yeah, more or less. That's basically 3% of your account if you have 30,000. So let's see what you'd make if you had a hefty account like that. On this one, you'd make whatever that is, $25,000 on that trade. And if you lost, you'd lose $1,000. So the risk to reward on this one was super high, 25 to 1. That's just because of the really tight stop loss right here. They won't always be that high, but they also aren't ever low. They're definitely never like, I see gurus out here taking trades that look like this. I mean, that's just like that's a fucking crapshoot. I don't know how people are seriously teaching other people to do this. You won't take a trade with my system that's under like 1 to 4, something like this. So essentially you could have a 25% win ratio and still break even minus fees as long as you're trading 1 to 4 ratios like this. But even if you don't have a course, I'm gonna post this on YouTube. Even if you don't have my course, this risk management system is basically a good risk management system for any trading system that you're using. Okay, let's go one over. Let's see. I didn't want this to be that very long because I'm gonna make a couple videos today. It's 20 minutes, no, 15 something. So this is already marked up. I took these trades too. This one here, this is a 20 to 1 risk to reward ratio at 1.5%. And this was 1.5% also. This was a 10 to 1 risk to reward. So if you're risking $200 on this one, you make 4,000. And this was over the course of, I mean, these are swing trades. These aren't scalp trades. So this one was held for a little over 2 weeks. But still, risking $200 to make 4,000 is pretty outstanding. And like I said, me and the students did take both of these trades, and then I actually went short right here at the very top, just thanks to my take profit levels that are basically standard with the trading system. This is that 1.618 again for wave threes. I went the more conservative route on this one. This is like almost to the threshold where I switched from fibs based on log scale or fibs based on linear scale to log scale. So I actually went the more conservative route and left the fib level based on linear. So it made for a shorter take profit. I'll go over the reason when I do which on later in the course, but basically the based on log scale is perfect on this one too, which I wasn't mad for taking profit early, but this is just so textbook. Bitcoin's been so generous lately. And this was also a golden pocket trade on a wave 2. And then this wave 3 was a 382 trade, which is also textbook. But I didn't take this trade, if I can remember correctly, because of this 1-to-1. There wasn't confluence. There was you probably don't care, but let me see. My entry didn't fill on this one, is why. So ABCs tend to be a 1-to-1 extension, and I had my limit order sitting down here and it didn't fill. So I didn't get in. I got in on this one. This is a subwave that also bounced off the 382. This was subwave 4, and that one snagged my entry perfectly. And 1.5% stop loss, 10-to-1 risk to reward, and then literally, I think this is the right extension. Yeah, literally called the very, very tip top of this. I think I posted this on my Instagram, like one of those IGTVs before that happened. And anyways, this was the Corona crash. This was like totally freaking crazy. I had a short to here, which was what my trading system was telling me to do, and I took profit. And man, I wish I wouldn't have. It would have been sick, but oh well. I can't win them all. That's one thing you can't do is you can't be too greedy in this game, and you can't have FOMO. Especially trading margin, Bitcoin or any crypto margin, you really got to have a trading system and stick to it, or this game will just eat you alive. But step one is a good risk management system, and hopefully we establish that today. If you guys have any questions, y'all know what to do. Also got a Binance tutorial coming next, so that'll be good for some of you guys.